World Federation of Exchanges General Assembly and annual meeting is taking place in Johannesburg, and to find out whether the perimeter of regulation is being extended or if the banks are succeeding in pushing back, Samantha Loring caught up with Ron Arculli, who's head of the World Federation of Exchanges.
I think we generally, tend to have a number of different topics, but I imagine the one that is probably on everyone's mind is the global economy, and whether there's going to be a double-dip recession from our friends in the West, and the concern that investors have about the volatility in our stock markets, in our financial markets, and as well the ability or determination of our political leaders to put politics aside and really do the right thing for their own people, their own markets and their own country.
Talking about volatility, I mean, from a daily basis we see stocks going up 3% and we see them coming back down again 3% the next day, and these are large cap stocks which have been around for many years. You see their market cap can double in one day and halve the next. How does that set the tone for the type of discussions in terms of how exchanges operate?
I think from our perspective, what we need also to make sure that in these times of volatility that all our systems are functioning properly, that there are no quirks or hiccups, because that could create a whole different set of issues and problems and perhaps misunderstandings. So luckily and happily, all of our members are functioning properly and well. But the volatility is maybe a lesson that investors need to take to heart, in the sense that stock markets are for really medium, long-term investments, and hopefully that will help iron out the volatility that you see periodically in times of stress.
Let's talk about how exchanges make their money. What type of trends are we seeing with regards to fees and commissions?
I think as far as that's concerned, the exchange scene, if I could put it that way, is highly competitive today. There are many other alternative trading platforms that are simply trading the shares and do not have any of the regulatory roles that exchanges and the regulators play in the regulated exchange market. So right now, I would think that there's probably an unlevel playing field when it comes to the expectations of the public role that my membership fulfills in their respective jurisdiction, as opposed to the alternate trading platforms, which are simply trading shares, pure and simple.
So how do exchanges then differentiate themselves and make sure that investors see the value of going through the exchange as opposed to these alternate platforms?
I think the traditional and our mandate, so to speak, price discovery, transparency, corporate governance, and the standards, be it accounting or legal, that companies are held to account to when they are issuers in a publicly traded exchange.
Let's look at fixed income markets and listing of bonds on exchanges. That, of course, is the bugbear for the JSE here in South Africa, that bought the Bond Exchange of South Africa and looking to automate the trade of bonds, and that's been heavily resisted by stakeholders, particularly on the bond side of things. What type of examples can you cite where we've seen national treasuries and corporate bonds being listed, and there's been that successful automation of the bond markets?
I think as far as the bond market is concerned, or fixed income generally, whether you're talking about debt that is issued by governments or whether it's by corporate, so far as I'm aware, the bulk of the trading is really done by the bankers, who generally tend to be taking a position. They are not the intermediaries that you would use if you were to buy or sell a bond on an exchange. So I think for that reason, probably from the point of view of the intermediary or the investor, the price discovery is not transparent.
And that's the biggest issue. That's why many resist it, because of that issue around transparency.
Well, because everyone is saying that I'm a principal, so why do I have to be open? Why do I have to enter the world of transparency and fair price discovery? So commercially, you can criticize them that perhaps they're being not quite fair, but it's really up to the investor whether they want to deal with a bank or whether they want to deal on an exchange. And I imagine as time goes on, you do have investors that have sufficient clout that are able to shift some of that business onto the exchanges, which is good for the whole market.
So the push really needs to come from the investment side, from your perspective? I
think so, yeah. I think that they can help a lot.
Let's talk about Africa, because of course African bourses are a lot further behind in terms of development. We have the likes of Angola still looking to develop a stock exchange. Rwanda only has 3 listed shares. Nigeria, of course, a lot further ahead. What can African bourses do to help deepen the market, especially in light of the volatility and the dependence that they still have on foreign investors?
I think as far as that's concerned, I mean, the simple, straightforward answer is Johannesburg Stock Exchange. JSE can play an amazing leadership role in terms of helping your neighboring countries set up, etc. and all that. And clearly from the World Federation of Exchanges point of view, we would also be able to assist in what I call the very basics of a stock exchange, how the rules and regulations are done, etc. and all that. I mean, after all, part of our function as a federation is to ensure quality and as much equality as possible in terms of the functioning of our membership in their respective jurisdictions. Now, there are obviously going to be differences and different countries, different economies with their growth path and the speed of development. But one's got to just embrace your neighbors and ask them if you want to send people to the JSC like we do in Hong Kong. That is probably the most practical way of helping our neighbors.